Okay, so for this video we're going to have a look at Siemens, which is one of the biggest companies in Germany. They specialize in electronics in any way, shape or form that you can possibly imagine. If you need a system integrator, if you need additional electronics for driving your cars, when it comes to a smart grid, if you need them for healthcare electronics, anything when it comes to electronics you can possibly think of, I think Siemens might very well offer you that product. So there's a good reason why they are one of the biggest companies in Germany, because they offer pretty much any electronic that you can think of. So let's have a look at their financials. Let's see whether or not we can project Siemens into the future, and let's see if Siemens is a good stock to buy right now and hold it for 10 years. So having a look here at their revenue, what we can see already is that they started off with 74 billion euros in revenue in 2012, which has increased all the way to 72 billion in 2021. Now, this is a 2 billion drop in a time span of 10 years. Now, of course, they also posted some higher revenue numbers during that time, but I think by and large, they've been very much circling the 17 billion revenue mark. So overall, when it comes to revenue growth, I think Siemens has not really seen that for the past 10 years. But then again, they are already quite big. I also made a little note here because I noticed a very steep drop here between 2017 2018. And I was looking to see if there was a specific reason for it, but I actually couldn't find anything in their 10K. The reason that they have for the lower revenue is basically that all their divisions have just posted lower revenue numbers that year, and it wasn't one big incident or anything. It's really just because the market wasn't as favorable to them that particular year. So this brings us to EBITDA, earnings before interest, taxes, depreciation and amortization. This is really their bottom line. Basically the raw numbers before any accounting will have effect on this number. And I think when we look at this, we see a start here in 2012 of 9.5 billion, which has risen all the way to 10.7. So I think if anything, this shows that Siemens has been able to increase their margins when it comes to their revenue and earnings growth. But still, their earnings growth has been less than 2% a year. So they are not even outperforming inflation. So I think when it comes to that, for the initial red flag of Siemens is that this seems to be a very, very mature company and there's not much growth to be had here. So this then brings us to their debt level. Now what we do see here is in 2012 they had a debt of 20 billion, which has risen all the way to 50 billion here in 2021, which is a relatively big increase of about 9.4% every single year. And normally I wouldn't really think this is a problem, but because their earnings have not really been growing that much in line with their debt level, I think it's starting to become a little bit more scary. But we'll have a look at the additional columns before we make any definitive statements about that. So looking at excess cash on hand, we can see that they started off with 3 billion cash on hand, and towards 2021 they had 10 billion. So of course they can use this cash to buy back any immediate debt maturities that might be coming their way, which is always a nice thing to see. So this then brings us to market cap. This is the entire value of the business as seen on the stock market itself. So this is basically the amount of shares outstanding multiplied by the share price at that particular year. So we can see here an increase for the past 10 years of about 5.6% every single year. And this takes into consideration that 2021 was an absolute record year for them. So luckily for them, I included this number into my 10-year spreadsheet, because before that it would not be as rose-colored as it is right now. So this brings me then to enterprise value, which is the entire value of the business. It's the entire value as seen on the stock market itself, but then we add the debt and subtract the cash. Because if we want to buy Siemens as a company, we of course have to buy their shares from the open market, but we also have to incur any debt that Siemens may have on its balance sheet. So this is very much included in the entire enterprise value. And we can see that the enterprise value has been growing a bit faster than the market cap has, because they have been increasing their debt level faster than they have been increasing their excess cash on hand. So when it comes to their multiple, overall they've always been trading at around the 11.5 times multiple. Historic lows here for the past 10 years has been 2015 when it traded at 9.2, and the past year of 2021, the COVID stimulus high, where basically every company posted record earnings, they had a multiple of 15 times. Now, I think this is a bit of a high multiple considering the very low growth that Siemens has had in the past 10 years, even though for the final year of 2021 they have increased their earnings and have increased their revenue. I don't think it's a good enough reason to give them a multiple of 15 times. And then it brings me to net debt to EBITDA, and I think this is where the picture of Siemens starts to become even more scary. It already started getting scary the moment that we saw low revenue and EBITDA growth, but now that we also see that net debt to EBITDA level is becoming a bit more frightening, because their leverage level has been increasing for the past 10 years because their earnings have been remaining relatively stable, but the debt level has been increasing. So of course this means that they start to over leverage themselves even beyond the multiple where I am personally okay with owning a company like this, because the moment that they start to go beyond the 3 times multiple, what we see is that big investment banks, or whenever they want to issue additional bonds or ask for a loan at an investment bank, they're going to have to pay a premium when it comes to interest on those loans because they are already quite leveraged and the risk for them to go into bankruptcy is higher, and of course with higher risk people expect a higher return. So even for the last year, 2021, which was a record earnings level, well, almost record earnings, 2017 was slightly higher, but still a very high earnings level for them. Even with the very high earnings, they have a net debt to EBITDA ratio of 4.7. So I would definitely say this is a very red flag when it comes to a company like this. And of course Siemens is very established and very big, and they can get away with a bit more than maybe most companies can, but I still think it's a bit of a red flag. So this then brings us to their cash flow statement. So looking at that cash flow from operations, the pure cash money that they make from simply operating their business, we can see they've been increasing from 7 billion here in 2012 all the way to just over 10 billion here in 2021. Which is by any means an absolute record number for them. So overall, because of course this last number is included with the COVID high, they do see an annual growth of 4%, but I think by and large their growth level is quite low, all things considered. But of course a low growth is not necessarily a bad thing as long as you're able to increase your margins. And I think this is very much what Siemens has been doing, because their growth is slow but existent, while the capital expenditure, so all the future proofing and future investments into plants and maintenance and additional future proofing basically of the company, is coming down every single year. So I think overall this shows the picture that they are increasing their margins, and that is the way that they're able to create value for you as a shareholder. So I also added this debt column to see what they've been doing when it comes to that debt level. Have they been issuing additional loans, or have they been paying back their loans? Now I think by the most part we can see that they've been borrowing like crazy every single year. Now every now and again, like last year when they made a record profit, they pay back a little bit of debt, but overall we can see that they've been borrowing more than that they've been paying off. And this is also what we see with that debt level here, that total debt level, because it's been slowly but surely increasing. So this brings us to free cash flow. This is your pro rata ownership of the company. This is basically for any cash flow investor, any value investor, this is the number that matters most, because this is your pro rata ownership of the company. This is the money that's available for you as a shareholder. And what we can see here with the free cash flow is that it's been relatively stable for the past 10 years. Of course, I do see some very high numbers here in 2015 because they borrowed the money, right? And even though it's nice because it boosts your free cash flow for that particular year, it also means that you will have a outstanding loan which you have to pay back, as well as the interest that comes with it. So for the future years, we expect a lower free cash flow because of that borrowing. And this is also kind of what we saw in the years following that. Looking at their shares outstanding, I think this is very much a positive thing about Siemens, which is to say that they've been able to buy back their shares very consistently for the past 10 years, thereby increasing shareholder value. Because they've been increasing your ownership of the company even though you haven't bought any additional shares. It's simply because they are shrinking the pie, so to say, of ownership for their company by about 1% every single year. So free cash flow per share, it's the free cash flow divided by the amount of shares outstanding. And what we can see here is that Siemens has very much been a cash flow positive company. Every single year they are making money and they are able to use that money to reward investors in the way of dividends, in the way of share buybacks. And I wish they used a bit more money to buy back that debt, because I think that for me as a shareholder right now of Siemens will be my number one priority. I think I'm okay with not receiving a dividend for a few quarters if it means that the risk of bankruptcy and the leverage of this company is decreasing because of this. So I would very much like Siemens to actually pay down that debt as opposed to use that cash to hand it out back to investors. But we'll have to see whether or not they do that in the future. So this brings me to the price per share as seen on the stock market itself. And we can see here in 2012 that it had a share price of 79 euros and 65 cents, which has increased all the way to 151 here in 2021. Now, again, this number is an absolute record number because, of course, they also posted record earnings. And of course, because of the record earnings, we can also see that the share price appreciated because of that. But I think this number, like I mentioned with the multiple up here as well, is a little bit high for a company that's historically not seen that much growth. So this brings us to the free cash flow yield. On average, they've been at around 8.6 times, where every now and again they had a very low number, like in 2014, like in 2021. And I think these were times where they were a bit more overvalued maybe than other times. But overall, we see an average yield of 8.6%. So this then brings us into the business of trying to forecast the company of Siemens into the future. Let's see, if we buy the stock now and hold it for a decade, what can we expect to receive 10 years down the line? So when it comes to that EBITDA growth, I can't do anything else but give them a 1% growth, because I think that is the trend that we see here by and large. Of course, last year was an absolute record growth year for them of 18.3%, but this was during a COVID and stimulus high. And I very much don't expect them to see this kind of growth in the future. So I'm going to be very conservative, or maybe not even conservative, I think more in line with the actual numbers that we've seen for them in the past 10 years, and say I expect that earnings to grow by 1% every single year. I give them a multiple of 11 times. Now historically they've been between 9 and 15 times, where I do think that 15 as well as 13 has been slightly overvalued. So I'm just going to take the average number and be a bit more conservative, because I'm taking 11 instead of 11.5 and use that as my multiple. Because I think especially a company like Siemens, which has shown very low level earnings growth, I don't think a high multiple is warranted for a company like that. So I'm going to give them 11 times. This gives me an enterprise value 10 years from now of 130 billion euros, to which we subtract the debt as the cash, and that gives us the market cap, the price as seen on the share market itself. We divide that by the amount of shares outstanding. Now I do expect them to have a lower number of shares because they've been consistently buying them back for the past 10 years. But just for my level of conservatism, because I'm not sure what's going to happen in the future, they may very well use some of their free cash flow to actually buy down their debt as opposed to buying back shares. And if that happens, of course, this number doesn't change. So I'm just going to leave it as is. And if it does go down, it's only in my benefit. So this gives me a stock price 10 years from now of 113 euros and 6 cents. Now, as you might have noticed already, this is quite a drop from their 2021 share price of 151 euros and 82 cents. So for free cash flow, I'm going to do a very similar thing. Now, when it comes to free cash flow, of course, what we saw is that sometimes they borrow money, and with that borrowed money, they can pay it out as dividends, or they can use it to buy back shares. But overall, whenever they've borrowed money, I don't think it's an accurate representation of what the company itself is capable of. So I actually want to take a number where they actually paid down some of their debt, like 2021, and use this number as the free cash flow number that I want to project and grow into the future, because I think these are the more accurate numbers of the company itself as opposed to any artificial number that's pumped up by additional borrowings. So I'm going to take 2021, 8 euros and 7 cents, and I'm going to grow that by 1% every single year, in line with their earnings growth and in line with the reduction of their share count. So if I do that for 10 years in a row, I end up with a free cash flow per share of about 9 euros 10 years from now. I'm going to attach an 8% free cash flow yield to that, which is slightly lower than we've seen from them historically. So I think this free cash flow yield is being relatively nice to them, because the moment that we put this at 8.6, what we can see is that their stock price starts to drop a little bit. So I want to give them a little bit of leeway when it comes to this free cash flow yield, because they have been doing lower numbers historically as well as I think 2 very high numbers, which I think skew the numbers here a little bit. So I'm going to say 8% is what they've been doing historically, which gives me a relatively conservative, although accurate measurement of the future. So right now we can buy as many stocks as we want from Siemens for 145 euros and 44 cents. Now if I take both my projections into the future and cut them down the middle, because I'm not sure which one is going to be correct, but I think they're very similar to each other anyway, that doesn't really matter that much, I get an average share price 10 years from now of 112 euros and 23 cents. Now, simply looking at the stock price itself of 145 and 112, I expect the stock price to decrease by 2.6% for the next 10 years because of their very low earnings growth and low revenue growth. I expect this number to go down to previous levels as seen in, let's say, 2017, 2016. I think this is more of a fair price for a company like Siemens with their current financials. Now, of course, like I mentioned, Siemens is very much a cash flow positive business. And of course, if you buy a stock now and hold it for a decade, you also get your fair share of that free cash flow as an investor. So if we include the free cash flow that we projected out here in our free cash flow model and assume that you get that as an investor, then I do expect you to have a internal rate of return of 4.5%. Now, I always say on average the stock market returns an IRR of about 10%. So I think when it comes to that, I think Siemens is very much underperforming the market here. But of course, Siemens is a very big brand, a very renowned brand, and a very famous brand. So I think you pay a little bit of a premium for owning an established company like this, and I think this is very much what you see in our projections as well. So let's see what happens if the price goes up or the price comes down a little bit. Now if the price comes down to about 104 euros, I think at that moment it's fairly priced, and I estimate it to perform in line with the average market expectations. But if it goes up a little bit, I'm very much not interested. The moment it reaches to 160, 3.7% IRR is just not worth it for me as an investor. I think when it comes down to 100 euros, it might be okay-ish, but I think I'll still look for my value elsewhere. Personally, I do not think I'm interested in Siemens because I don't think the risk reward is there for me. But of course, you can make your own decisions. So this was a stock analysis for Siemens Group. Thank you very much for watching. Don't forget to like, subscribe, and all that good stuff. And I'll see you in the next one. Cheerio!